Hey, what's happening, guys? It is Tuesday the 15th. I'm in Las Vegas. I'm at the Flamingo, interestingly enough. It's kind of weird hotel, but I've got a phenomenal deal on suite. So that's what I've got. I've got a suite here. I'm getting ready to, I've got a really cool opportunity today. I'm going to go see how this plays out. I'm going to report back on it, but I'm going to be unavailable for a couple of days and see how this works out for the future, for some marketing, things like that. But I wanted to get this out to you guys. It's kind of different on how I'm setting this one up. I have to do the video piece from my phone and share screen from my computer, because the normal computer I use, I couldn't find my travel cord for it. Kind of interesting. So I'm having to use my Toughbook, which doesn't have a camera on it. It doesn't have all the features I'm used to. It's kind of a bare bones setup, but we'll see how this goes. So I'm going to do a share screen with this and see what we're able to get out of it. So let's take a look at the mortgage-backed securities again today. So there's a lot of news out there about the rates are going down, things are getting better, and that kind of stuff. Guys, it's not the case. I'm looking at it right here. This is the Fannie Mae 3.0. This is where I'm doing a lot of locks along this line. And so now this going down, this trending downward, these daily candlestick patterns, if you will, and the trades happen here and there. What I am seeing is this trend going down means the market is losing funds. People are trading out of the mortgage-backed securities, and as they trade out of the mortgage-backed securities, the interest rates go up. So we've actually seen some. We traded out of the channel, which we've stayed in for quite some time. We traded out of the channel the last couple of days. Yesterday actually took us out of that channel. We should have stayed within it, and as a result of that, we're actually seeing a little bit of a bump up. Not significant though. It's a very, very small bump up. Rates are pretty close to the same, but the cost for each rate has gone up a little bit. So that's what we're kind of up against at the moment. So when there's all this news out there, rates are better, just know when you're talking about real estate investors, we're not seeing that. The other thing of it is refinancing for rate. Just a reminder, guys, refinancing for an interest rate is not a reason to refinance, as far as I'm concerned. If we're not pulling out cash to invest again, you're actually putting yourself in a position where you're costing yourself money. Now we're looking at the 3.5, it's staying within the channel. So your higher interest rate stuff, your duplex, triplex stuff, we may be, everything's gonna be pretty much exactly the same. Your single family stuff, we're starting to see a little bit of a bump up, just a slight bump up in things. But let me just remind you, let me think about this for a second. I find it very interesting. And again, this is just my own opinion. I don't have a lot of the facts and the data to talk about this in front of me at the moment. But I just saw a lot of people shooting me emails again today saying, hey, it looks like rates went down. Should we consider a refinance on what we just did? No, I don't see refinancing a property that you may have acquired within 3-4 years even making sense. Because let's think about the first few years of your amortization table. It's all interest. And I find it very interesting. I've been doing this since 1997. We keep seeing a refi boom every several years, like 4 or 5 years. Well, if people can be convinced to continue to refinance their home every 3, 4, 5 years, and they're in the extremely heavy interest period, we look at an amortization table, it's almost interest, all interest those first 4 years, and you convince them to add the cost of the refi to the loan, extending out the loan, and keep them continuing to refinance those properties and stay in that heavy interest period without getting ahead on it and paying costs to get there, who's winning? We've talked about inflation. We talked about how inflation erodes the debt. The longer you stay in the loan, the less you actually pay. But if you keep refinancing and you're in this habitual refi pattern, you're never getting ahead. The people who offer a 30-year fixed loan, they know this. They know that inflation is going to pay them less. So they market heavily to convince you to refinance. No, so there's other couple things you got to think about. Talk to your CPA about. When you refinance on an investment property, it drops down your payment, right? Increases your cash flow. If you increase your cash flow, do you increase your taxable liability? And in that process, you're decreasing your interest rate, therefore the interest paid, therefore are you decreasing your tax deductions? When you think about those things, you're not getting where you think you're going to get when all things are said and done. When you get to the end of the year with your income that came out of that property, and you file your taxes and you figure out exactly what it is that you owe, Are you really as profitable as you believed yourself to be? Also, by paying the costs associated with refinancing that property and putting yourself in an interest-heavy period, are you getting where you believe you should be? Things you need to think about before you start getting into the desire to refinance based on interest rate. I don't know that refinancing for rate is the wisest thing for a person to do. Now, if you're dropping 2-3 points, just because, I mean, especially on your primary residence, because that's your expense. When you're talking about something that you got somebody else paying, that you get to write off on your taxes, that you get to continue to raise rents on because of inflation, and you pay less over time because of inflation, you got to reconsider your desire to refinance. If you want more details, you want to go into the depth of some of these things, let's plan a conversation. Schedule some time. Like I said, I'm going to be gone a lot this week. I'm going to record again on Friday. But if you're not hearing from me directly, I've got 26 team members that will be able to connect with you and help you get through things. There's about 4 senior team members that can help me out with a lot of the calls and things that'll come into my absence. But I appreciate the trust. Appreciate you guys continuing to work with us and let us participate in the growth of your business. Thank you.